Banks do not want anyone to know how to buy a home with a 3% mortgage. Why is that? Because right now, today, you can buy this home right now at a 2.75% mortgage interest rate. And you can also buy this home at a 2.75% mortgage interest rate. In fact, you can buy this one, and this one at a 2.65% mortgage interest rate, all the way up to 4.9% right now today, which seems impossible because right now today, the 30-year fixed mortgage interest rate is trading at 7%. And it wasn't that long ago that mortgage interest rates were trading in the 8s. Hello friends, welcome back. It's a great day in South Florida, and today we're going to talk about something I suspect you're unaware of. And frankly, I suspect there are lots of agents that are unaware of. And I'm sure my mortgage lender friends and the banks and institutions are probably not going to be real happy with me, because if you don't use their product, they don't get paid. And to be totally clear, I'm not against anybody getting paid if they provide value, if they play it straight, if they give you full transparency, if they give you all the information that you need in order for you to make the best decision for yourself, for your family, and for your financial bottom line. And if you've been watching for a while, you know that I've shared the truth about what's happening in my housing market. And I've shared the truth about everything that I see throughout the country. But it is indisputable that the transaction count, the amount of homes sold, has declined radically over the last few years. There are lots of people that are stuck in their homes, or so they think, because there's no one who's going to trade out of a 2%, 3% mortgage into a 7, 8, or 9% mortgage. That simply does not make sense. That is not in their financial best interest most of the times. And so they feel stuck. And yet, separately and independently, there are lots of folks that would like to buy a home who simply can't at 7, 8, 9, 10, 20%. They can't afford to do so. It is financially impossible for some people. But there's a ton of folks sitting on the sidelines. In fact, I'd go as far as saying there's a metric shit ton of folks sitting on the fence, waiting on the sidelines, praying that mortgage interest rates will come down. And while the general consensus is that mortgage interest rates will come down this year, which will certainly unfreeze the market in many areas, the lowering of mortgage interest rates is absolutely going to create another frenzy of buying. It's absolutely going to unlock the folks sitting on the fence who might want to sell. Now they can, because they can trade out of their home at a much more reasonable interest rate. But if you were paying attention to what I led with, I showed you 5 homes which are for sale right now with mortgage interest rates at 2.65 all the way up to 4.9%. They are trading at a significant discount to where mortgages are trading at right now. The truth is, right now, 1 in 5 homeowners throughout the country, which said differently, 20% of homeowners right now have a VA or FHA mortgage. That is the financing they used to purchase their home. And while I know most folks don't read the fine print these days, if they did read the fine print, well, then they would know that they have the ability to let someone else, a buyer, assume that mortgage. And each one of the homes that I featured in the beginning of this video, all are being marketed as having assumable mortgages. But if you're thinking about selling your home and your agent doesn't ask you what type of financing you have and doesn't understand how to market your home the right way, well, chances are you're not taking advantage of the enormous leverage that you have because of that low interest rate. So shout out to whoever the listing agents are on those 5 properties, because they're doing their job the right way. They're solving for the pain point that most buyers have. But I need to let you in on a secret that every real estate investor knows, or at least ought to know, and it's certainly something that every home seller should know, which is that if you're looking to sell your home and get the most money possible, and you're also open-minded to creative strategies and potentially offering terms to the prospective buyer, well, then chances are they're not going to lowball you on your offer. They're very likely to give you your number, and in many instances, they're likely to go higher. And let's face it, most folks who are looking to sell their home are looking for the maximum amount that the market will bear. They want to find the one buyer on planet Earth willing to pay more than anybody else. They're certainly not going to be open to a half-price lowball offer unless they are in tremendous pain, unless there's a financial pew-pew to their head. But right now, most folks aren't in that position, and they certainly don't feel that way. They think they're sitting on a metric shit ton of home equity. And depending on where they're at, they're probably right. But the market is always right. And the market is clearly showing us that sales volume, the amount of homes on the market, the amount of homes that have traded in a year, all of those metrics are down significantly. And yet the market is always good for someone, and the market will always trade. But if you happen to be one of the 20% of homeowners that have an FHA or VA loan, and you're thinking about selling, chances are you are in a phenomenal position to have all the leverage to market your home to get exactly what you want. And separately, for those of you who have conventional loans, please understand there are creative solutions around that too. And I know many folks are terrified of the potential for a due on sale clause in their mortgage contract. And despite the paper language and the paper tiger, I've yet to speak to a bank that wasn't willing to negotiate or accept payment from someone who was willing to pay for that loan. Because the bank knows that they own the debt. They don't own the title to your house. You do. And the truth is, the bank is only interested in getting paid, period. They're interested in profit. They're certainly not interested in not getting paid. They're certainly not interested in taking a loss. And the last thing that they want to do is become a property manager for a property they don't want in the first place. They just want to get paid. And yes, I'm aware I kind of got ahead of myself and went all over the place, but assumable mortgages are nothing new. It's not exactly rocket science. And yet, there are many real estate agents out there that don't understand what they are. They don't understand how to handle the contractual obligations. They don't understand the paperwork. And the same holds true with creative financing and putting together a creative deal. But none of this is new. Many of these strategies are what was employed back when mortgage interest rates were at 18%. But it should be clear, there is always a solution. And while I definitely can't control mortgage interest rates, and I certainly can't predict when the market's going to go up or down, I am absolutely your best advocate when it comes to negotiating and problem solving. I hope you found this content valuable. If you did, please subscribe to the channel, give it a thumbs up. If I can help in any way, please reach out, because who you hire matters.